Good morning, everyone. I'm David Paul. I'm the Managing Director of VectorVest in the UK. And at VectorVest, we put a valuation, a safety of earnings, and a number to the trend for every share that's listed in the London stock market on AIM. And we sort all of the shares on the market by our proprietary metric, VST, value, safety, and trend. Our objective is to find undervalued stocks that are growing their earnings safely, that are rising, and we want to buy them into a general market that's rising. And I'm going to spend a great deal of this morning on the general market itself because at the moment we have a mixed picture, as you probably know. So in the first slide, I have a chart of the VectorVest composite of the UK, which is a composite indicator of all of the shares that we follow in the London stock market on the AIM, equally weighted. So the red triangles and the green triangles represent the longest term market timing signal on VectorVest. And as you can see, the longer term trend turned up in October. And as we go into the trading day today, the long-term trend of the London stock market is still up. However, the short-term trend is down. It's been down now for the last 3 days. And I think anybody who's been watching the news will know the reason why. We're at a very important level today. And as you can see, yesterday the market pulled back and has made a small double bottom formation at very significant levels. So what's happened is that old resistance has now become support. We're doing this at about 9:30 in the morning. Last time I looked, the FTSE was holding its ground, so that level is holding, but a very, very important level for the London market today. In the next slide, we have the US market, and this is the US VectorVest composite. It's a composite indicator of 8,500 shares that we follow on all the American bourses. And this shows the incredibly strong momentum move that we've had since October last year, where the S&P, for example, is up 15% in that move. Market broke out of a range that's been in place for about 18 months and can quite easily pull back and kiss that old resistance. So there's certainly, there can be an awful lot more downside from here. In the next slide, I'll show you a blow up of that. That's the daily chart. And that's the price. That's that move since last October. And down below, we can see the market timing indicator, which is a proprietary VectorVest study, which looks at both the momentum of the composite and the momentum of the breadth of the market as defined by the proprietary VectorVest measurement or buy-sell ratio, the number of shares on a VectorVest buy recommendation divided by the number of shares on a VectorVest sell recommendation. As you can see, the price was making a rising top, but the indicator couldn't follow, and that's what's called bearish normal divergence. It's a leading indicator of change. So, ladies and gentlemen, the market needed a reason to fall, and certainly over the last few days, the Chinese virus has provided that reason. There's a high probability that there is a weekly top in place, and that we can have a significant pullback to those last old highs that I spoke about in the last chart. On a daily basis, the market would seem a little oversold from here, so I wouldn't be at all surprised to see a bounce before it resumes its fall. So just be very careful about shorting markets at these levels. There's a good chance that the market they'll take it right back up before it falls again. So very, very important levels today, certainly on the UK market. But this sell-off was well warned on VectorVest, and anybody with some knowledge of divergence could have seen that coming. But there are opportunities around. So on the next slide, I'm looking at gold, and as a substitute for the gold market, I'm looking at the American GDX on VectorVest US. And the GDX has made a very strong move up, and then it pulled back in what technicians would refer to as a falling wedge, pretty textbook falling wedge, and it's broken out of that falling wedge and has moved up nicely. It pulled back and a few days or a few weeks ago, in fact, charted a morning star candle pattern. I think that there's considerable upside in gold, and my timing models show that gold can easily quite run to the end of March this year. That would, in fact, be quite a nice momentum move in gold. So that's the GDX, which you can buy easily. And on the next slide, I've got Barrick, which is I'm holding both personally the GDX, and I'm holding Barrick as well. I bought Barrick, and I reported that at our VectorVest weekly meetings as it broke out of that falling wedge. Again, it looks as if it can move strongly between now and March this year, a couple of months away. The vertical line on the gold Barrick chart would be the target that technicians would use. It's called a measured move. So I think plenty of upside in Barrick as yet. And on the next slide, this is Polymetal. I've been holding Polymetal for a very long time, and it's doing its best to break that old 52-week high, and I think that between now and next March that'll do that quite easily. Going to be quite difficult to get an entry into that because it's already well off its base. The best entry was that last little double bottom 3-4 weeks ago. So just be careful there about an entry. And on the next slide, we look at silver, and silver looks incredibly strong. This is the UK exchange traded fund SLVR, and as you can see, made a double bottom during the course of last year. Very strong move up the page. It then pulled back in a classic 5-wave flag pattern and has broken out of that 5-wave flag pattern and charted some very positive candles over the last couple of days. So that looks to me as if that can move very, very strongly indeed. Remember, folks, that these are commodities. They have a temper on them, and risk management must be right at the first part of your consideration. So but that looks really good. And in the next slide, oil, folks. I haven't been talking about oil for quite a long time, or oil stocks for quite a long time, and I still think that there's more downside in oil, but in the next few weeks, I believe that oil will be beating out quite an important weekly low, and I'll be waiting for that. I still think it could easily be 3 to 5 weeks away. The gold price, or the oil price, probably getting down towards 45, 48 from here. As it goes back, I would suspect it's going to move back to a 78% retracement of the last range. If that's the case, then there's going to be bargains in the oil market, in the oil share market. I think that there's good opportunities ahead in precious metals. I think that there's a high probability that there's a weekly high in stock indices, and we could see more downside before support comes in. Be very careful with open profits. Thanks very much.